Thanks, Megha, and welcome everyone. We are very pleased to have such expert panelists today to discuss the India-Germany merger market opportunities and challenges. Um, as everyone is aware that India is one of the world's fastest growing economies, and this has led to an increasing number of Indian companies to invest in Europe for the purposes of their own diversification and also the rising demand, the consumer demand in India for German products. And vice versa, there is an increasing appetite in Germany for having access to the growing consumer market in India. Given this, Germany is India's principal trading partner in the EU. And the Germany's trade surplus with India is a testament to the strong Indian demand for German goods, especially capital goods, electric technology, chemical products, motor vehicles, healthcare products, and of course, vehicle parts. Besides goods, Germany also offers a lot of opportunities for Indian companies to invest and grow their business. Um, we're seeing increased demand from the Indian companies to invest in renewable energy, automotive, tech, and IT. In the current environment in the world, and specifically in Europe, I think key considerations are going to be the slowing economic growth, the geopolitical uncertainty in some of the economies in Europe, escalating trade tensions across the world, and the volatile stock markets, and now COVID-19. All of these are going to be factors that's going to determine how the Indian Europe market grows. But even in spite of all of these issues, given Germany stands out in considered to rest of Europe, and given some of the synergies between Germany and India, just having very strong trade partnerships and financing conditions expecting to tighten further, we expect private equity and corporate buyers to play a much larger role than they have in the past. And in that background, it's very helpful to have Bernd here today to talk about Bernd is CEO of Translumina, and Translumina is a global manufacturer and distributor of cardiac stents and cardiovascular medical devices. Translumina has become a very good example of German technology, intellectual property, and high quality standards married with Indian capabilities of manufacturing innovative products at affordable prices, and is going to be, I think, something that we can really look to understand the potential of combining the German R&D with Indian manufacturing. With that, if I can just get you into the conversation and help us understand, what led to the current structure that Translumina has, where ultimately you have an Indian company owning a German company, and the IP is, I think, a strong aspect of the deal, as well as the Indian manufacturing capabilities. So just please help us understand where do you see the growth prospects here?
Key issues when we want to discuss about opportunities of cross-border investment.
Could you be slightly louder or closer?
Let me see. Is it better now? Is it better now?
Yes, Bernd, go ahead.
Okay, good. Transaction. So what I want to say, that transaction was not a quick thing we have done suddenly because we saw immediate opportunities to enter with our product in India, rather than it is a result of many years of prior cooperation we have done between Germany and India. So we go back to the midst of the first decade in the years 2000, when we set up a new product technology and looked for business partners, distributors worldwide. Among them was an Indian company called Advanced Therapeutics, which is today Translumina Therapeutics India, by the way. And they have done a fantastic job. And we went in and entered a very good cooperation, very successful. After a few years, I think it was time to look more from a market point of view, how this cooperation shall further be proceeded. And of course, as everybody knows, India today, even at that time, has becoming really a big role in the world, a strategic role just by geography, by its, let's say, economical power, which would evolve the next decades of years. So there is a lot of potential, and there is a lot of things to do, also to come up in medical treatment and with pharmaceuticals, as well as with medical devices. So we were sitting together with our colleagues in India, saying how we can penetrate better the market in India, deliver good products, good quality, and how we can make it even better what we do today. So that was early in the second decade of this year. And we come quite quickly to a conclusion that India market will further boom. It's a two-digit growth annually. So volumes come up, and when volumes come up, everybody understands that your cost structure must be right to have the right prices at the end of the day, whatever are the right or the best prices are. So it was clear to us, in order to have a better competitiveness, that it could be a good idea, or it shall be a good idea, to share our capabilities in manufacturing, in product development, in regulatory issues, and of course also in marketing. So we ended at that time a broader cooperation, not really a gross shareholdership, but a broader cooperation, which was reflecting product development, marketing, and manufacturing. So we started with bringing some manufacturing processes from Germany to India to make Translumina India capable to produce to some extent their own products, bringing added value. We further served from Germany with core processes, so still components were coming from us and was finished then in India, including sophisticated processes like drug coating of the stents, which is really a very dedicated, very precise, very sensible process. So we brought this know-how over, and they have done well. So a facility was brought up in Dehradun. We started production. So I think that was a good thing, not only to become competitive or better competitive in cost and in prices, but it was for us also to leave a footprint into the country. So to make us more aware, more visible, more, let's say, recognized as a company which also does not only absorb consumption of products and sales, but also brings some value into the country by having a facility, by having the offices there, or the operations. So we create the jobs, workforces, and that means we brought more than only products. We brought value into the country, and it is my perception that this was also very well accepted by the community in India. So this worked further on and on until we come then to the year 2018. I would say there was a first approach by our management, by us in Germany as well as in India, probably too much together. At that time, we thought probably it's a little bit early. We just still need to sort out and think how we will structure ourselves, and how then the whole organization shall fit to what we want to do. So finally, we ended up in 2019 to go for this transaction, just 1 year ago. And so today we are in a new shape. We are backed by a big, very capable private equity, which is ready and was committed. Therefore, they invested in our companies to bring the necessary funds for further growth into the business, for more worldwide promotion, marketing, sales, for more production, new products, either organically developed or maybe acquired. There are a lot of possibilities, I think, in the future for us. And I'm happy that we are now in this new structure because it shows up, and we were aware of that in the beginning, that it shall bring us a lot of synergies, a lot of new inputs. And we are currently at the stage that we a little bit adjust our organization to further penetrate and to make us stronger, also international business. And just now, finally, to say Germany here and India, New Delhi or Dehradun, this will be our core head offices and facilities. So we continue to invest here in Germany for manufacturing technology as well as new product development. So as you mentioned, Pratibha, before, we have a strong IP and we will maintain this IP, we will extend this IP, we have very good engineering. On the other side, our colleagues in India are the experts in, I would say, marketing and market intelligence. We have so much and so many synergies to grasp for, to strive for, that I'm so confident for the future that we have a good future in front of us.
Thank you so much, Bernd. It's so good to hear actually that, the coating's done in India now, which is more than just, the basic manufacturing that requires a lot of talent. And also that, the manufacturing, you finally have the confidence of moving manufacturing in India. Though I understand it's still manufacturing in India for India. I think what India would look forward to is when it starts manufacturing for exporting all over the world, especially because you operate in some 30-40 countries. I'll come back to you, Bernd. Let me just bring Abhijit quickly into the conversation. Abhijit, we did the Translumina, the investment by the private equity firm that Bernd was referring to when Everstone put it in, and it helped that we have an office in Germany, and so we understand the Indian-German corridor better. And somebody like you, who's Indian origin, sitting in Germany, I'm sure you're seeing a lot of a broader picture of what that market is looking like. And so help us understand, what are the sectors you're seeing in which deals are happening, and what are some of the challenges you might face while doing these investments. So the opportunities and challenges.
So thanks so much, Pratibha. Thanks so much for the kind introduction. Happy to join this panel today. And let me first start by giving a macro picture, and also goes back to my decision about 8 years back when I decided to move to Germany. And the fact that you have an office here, and I remember when the office was open in Munich, Mr. Desai was also there. I met him there. And the fact that I decided to move here a few years later, your firm decided to open an office, I think that underscores the importance of Indo-German business. But as I said, let's look at the macro picture. We're talking about Germany. Germany is the 7th largest foreign investor into India for the last, I think, close to 20 years. Just to put some numbers, and when I was thinking about this panel discussion, I thought I'll just look at some numbers because that gives a perspective in terms of what we're discussing. And I thought, what would be better than looking at the government of India's website, the Invest India website. So I went there, I had a quick look earlier today, and just giving some numbers from that. In the last 20 years, Germany has invested about $11.1 billion across different sectors. So Pratibha, your point about one specific sector, I think in the case of Germany being such a large and diversified sector, I think it's difficult to pick one sector. All the sectors have received some sort of investments from Germany. Some companies from Germany have been around for such a long time that I think we probably mistake them to be Indians, for like Bosch, Siemens, they've been around for such a very long time. I remember that some years back that somebody said about doing business in India is like doing a marathon. So if you are looking at India from a long-term perspective, I think for German companies, it's just the right place. Going back to the larger picture, we are talking about 1,800 plus companies, German companies in India, and these are mostly concentrated in cities like Pune, where especially auto component hub is there. Then you have Bangalore, then you have Chennai. I had a very personal experience about how strong the German Indian business is. When 3 or 4 years back, I went along with Minister Tariq Al-Wazir. He's the Minister of Economics for State of Hessen, in which Frankfurt is a part. And there was this business delegation. We visited 3 cities, Delhi, Bangalore, and Mumbai. And it was amazing, the kind of response and the reception that we received. And we interact with a lot of businesses across, again, different sectors. I'm told that 1,800 German companies which are there in India employ directly / indirectly about 520,000 Indians. That just shows that how important Germany is for India, and India is important for Germany. I continue to see a lot of investments, notwithstanding the current slowdown. And before that, I think COVID is much more recent, and we are still in the midst of it. Before that, also, if you see, there's not been a huge wave of either German companies investing into India or Indian companies investing into Germany. But what is important to notice, and that has been the salient feature of Indo-German business, is that the trend or the numbers of investment has steadily only increased. Not a single year, I may be wrong, but my understanding is, my reading is that not a single year has seen even a slightest dip in the volume of business. So that shows how important they are. Germany, of course, is the largest trading partner for India. And if you look at just the numbers for 2018 and 19 in terms of export import that India and Germany do, we're talking about $24 billion, 24 billion euros. So there's a lot of positives to take. And I think as we move forward in this discussion, I would like to highlight some challenges, but I don't think that takes away the opportunity, the potential that we have. I remember that Mr. Narendra Modi, our Prime Minister, when he had visited a few years back India, and India was the partner country at the Hanover exhibition, there was a statement by leader Chancellor Merkel and Prime Minister Modi saying that India and Germany are just natural partners. They are kind of meant to work together, So Germany being a large export-driven country and India being such a large market makes it a natural partner. But what I'm also interestingly seeing, and Bernd also highlighted that, is that India is not only projecting itself, and it should not just project itself as a manufacturing hub, which of course, because of good labor, we are able to do that. But gradually, we are seeing German companies also setting up research and development centers in India. And I think that is where we will be able to distinguish ourselves. We as an Indians will be able to distinguish ourselves from our neighbor, which is saying some tough times due to COVID.
If I may add one comment to this very interesting point.
Go ahead, Bernd.
Yeah, if I may just add a comment to that very interesting point. I fully agree, and that is also my own experience, what I've done when I went a few times to India also 20 years ago. And that was about also setting up some centers of excellence in India. At that time, it was a lot about software engineering. So I absolutely concur with the board. If we think about German-India relationship and cooperation, still probably the low-cost factor, the low-cost consideration is somewhere of particular interest. But as my colleague mentioned here, more and more we all see that India is going also to develop in technology, the trading mechanism worldwide, globally. And as I see, for instance, every year, I think 100,000 of engineers are leaving the universities. There is a huge potential of well-educated people. So I think that is also what we try to do once we entered into this deeper cooperation with India, that we also look for the long term, not seeing only as a low-cost center, but seeing the economy growing in India. There comes up so much of opportunities in technology, in trading, everything. So you must have a footprint, and therefore we invested in India together with our India colleagues. And I think that is also one of the future opportunities, what we have, not only low cost, but also using very talented young people, well educated in engineering, of course, also in other sectors in marketing and so on. So there is huge potential laying in front of the companies. It's just to absorb it and to take it on board.
Absolutely, Bernd, and that's going to be music to the ears of, especially the Indian government that's very focused on making India self-reliant. And I think research and development especially partnership with Germany, is going to be a key aspect for India to take up some of the opportunities, as Abhijit mentioned, that our neighbors might be providing us due to their own geopolitical issues. But Abhijit,
I was
just
just trying to be politically correct.
um, can I just ask everybody else to be on mute? Yes, thank you. Just Abhijit, while the macroeconomic discussion is very, very useful. Sorry, I just had a short power outage. Can you hear me now?
One of the challenges that we need to deal with.
So Abhijit, just very quickly, help us understand the legal landscape, right? Like we are a law firm ultimately. Just what are the for every jurisdiction that we work in. So for example, US has its own challenges within Europe. Different European countries, depending on the culture, the kind of law you practice there, with civil law or common law, it just varies. So just help us understand the nuances of doing an Indian-German deal. Sorry, you're on mute.
Yes, no, I unmuted myself. Happy to do that. I'm able to answer that only because we see it from both the sides. We look at German companies investing into India. Last year in Germany, we have this tax 30 that is basically the largest 30 companies in Germany. And we had the opportunity to advise a very long-standing client of ours, which is slightly media conservative, so there's not much news. But they had invested. We had advised them on an investment into a company in India. And even though the ticket size was not very big, it was the fact that they were investing into India that was important, and they're already strongly present in India in other sectors. In terms of the challenges, I think it's not per se the legal, and this is my personal opinion. It's not per se the legal issue. I think it's about the culture, which you also mentioned. It's about thinking what the other person is thinking and trying to understand that. When we worked on this deal, investment by a German company and into India, we relied on the support by a good leading law firm. And I think I cannot underscore enough or emphasize enough in terms of having the right partner. And right partner is not just a right business partner where, we have always seen a lot of time being spent in finding and understanding and agreeing. But I think when it comes to the legal, service provider, whether it's an Indian company investing into Germany, we work extensively with a number of Indian companies on their investments into Germany, and a few of them are now looking at insolvency / restructuring work. But it's just that they sometimes do not understand the importance of having the right partner. And right partner in this context is a legal partner. I don't think it's there is, of course, Germany has a civil law, India has a common law, but I don't think that is per se creating a huge obstacle or it's not something that I think cannot be dealt with. It can be. But it's more about understanding that A, we need to have the right partner. B, the system is different. And I think this especially goes for the Indian companies exploring the job market. System is different. In India, we use a word very often used, jugaad. In Germany, we don't have a system of jugaad. You cannot just find a shortcut to things or fix it. No, it doesn't work like that. There are certain well laid down procedures and rules, and Germany and Germans by nature, and Bernd, correct me, that's my experience in 8 years, are highly compliant. And a point in example to prove that is the way Germany has managed the COVID crisis. It's not that Europe was not affected. UK continues to be badly affected by COVID. Some of the other countries have suffered a lot. Spain, France, Italy. Germany, in comparison, has managed itself really, really well. If you look at the number of people who were infected or the people who lost lives. And this again comes into play when an Indian company is either doing as simple as setting up a subsidiary or doing an acquisition here. I'm told, and I have read also, that a lot of Indian companies in the past have been tempted to buy companies which are near insolvency in Germany, with the thinking that they can turn it around. And the shortcut they thought that they could adopt, and of course it didn't work for them, was that they could hire and fire people, take the production to India. It didn't work. they ended up burning their fingers with that. So I think a lot of time has to be spent in understanding the culture, the people that they're working with, whether it's your legal advisor or the partner that you're working with. For the German companies investing into India, I mean, some of the challenges that we already know, GST continues to be something that they're still struggling to understand. I have advised on other matters on German companies acquiring companies in India, and we have been stuck with approvals. I mean, it takes a lot of time. And this time I'm, talking more in terms of a micro level view, not a macro, but approvals take a lot of time. And it's very difficult to explain to our clients that, a simple approval from, say, a certain government body, could be Reserve Bank of India, for instance, can and will take 3 months, or it will be indefinite. So it's very difficult. Construction permits, if somebody is into construction, that's a sector that has seen a lot of investments from German companies, takes a lot of time. Bernd highlighted that IP is an important part of the business that they're doing, but I personally feel that a German company, when it looks to invest into India, IP is one of the most important consideration. There have been cases in the past where, I think Bayer, Supreme Court allowed compulsory licensing and all that. But the important thing to highlight is such cases get a lot of press, and I would say bad press in Germany. And for many days, those cases were highlighted, saying that you cannot do business in India because the IP protection is just not there. And again, we were compared to our neighbor country, where my personal view is that it's a lot worse. But it was just said that because IP protection is not there, you have to be very careful.
Okay, on that note, let me just bring in Payel. Payel, IP protection is not there in India. Something, we've been hearing for a while. You want to weigh in? Are we getting better?
The fact is, the IP laws were always there. It's not that the laws were not there or we didn't have any rules and regulations in place. But what we have seen in the last few years is there has been a shift, and we see a lot of M&A activity, especially in the IP space, where there is a lot of focus on the asset itself. And the second thing which we have seen is increased amount of awareness. Now people are, when you're investing, you're aware as to what is the IP. There are especially pharma companies and as well as in the media sector. When you're investing in that, you understand you require registrations, you need protection. The officers are even aware as to what kind, it has become digitalized. So everybody it's a more transparent process. There is more awareness. And at the same time, people are aware at the beginning itself, when you're doing your diligence itself, what kind of rights need to get protected, what protection is required. I think these are the two main facets which have come in very handy. And I think I am the not the expert on this topic. And actually, we have Webunar over here who can put in more light when it comes to IP protection. And separately on the fact that actually, as part of our cCep itself, we have done some detailed cCep, which we have dealt with actually what are the tax considerations, especially when it comes to IP issues, and as well as how we are seeing the IP-centric deals, how structuring happens, especially when it comes to IP. And I think Weber can throw some more light on that.
Vaibhav, can I bring you into the conversation? We know that the Ministry of Commerce has focused a lot on showcasing the IP protection laws in India and tightening enforcement. So, do you want to just touch on it?
Yeah, sure. Thank you, Pratibha, and thank you, Payal. I think, so I agree with Payal, right? So laws were already there. I think what Abhijit was specifically talking about was compulsory licensing, which is in the case of patent. Of course, IP, there are several laws, and we have done actually multiple cCeps on that, right? Whether it's patent, trademark, copyright, designs, etc., trade secrets. So in all factors, the laws are pretty strong, and to large extent very similar to what internationally what you would see in most of the world, right? On the patent side, specifically on compulsory license side, India has been a little bit late in catching up on the laws. Even right now, I would say patent regulations, other than two aspects. One is compulsory license, and other is evergreening concept, which in my view, I think it's a right way to move, especially for countries like India and developing countries where, it's very important for access, specifically in healthcare situation. These are the two areas where it kind of diverges or varies with some of the developed countries, the concept which they have in developed countries. countries. And I think it's time where they kind of get used to the laws on India on these two factors, especially in healthcare device. But other than that, the laws have been pretty much consistent with what you would see in the rest of the world. On enforcement side, I think Payel has already said things are looking much better. If you really ask me, yes, Abhijit was right that when compulsory licensing happened, when they're on Section 3D or some other aspects, there was a press because it diverged from what law they had seen. But I think now over a period of time, again, I sit in US where it was similar press, and I now see countries kind of accept India's position and have come to terms of it. And I don't think this is a major blocker or issue which they believe on IP which India has. So in other words, on IP enforcement, other than the time where it takes court to proceed, which is a standard bigger issues on the time frame which court take to proceed, I don't see there is a issue that you don't see IP protection in India, whether when it comes from Copyright Act where softwares and piracy issues on music videos and others were there versus trademark or on patent side. Generally, more or less things have settled down, and that's what my view is on the IP side.
Let me stress test that with Bernd. Bernd, are you comfortable with moving your IP to India?
Yes, our IP has been long time already registered in India. So we did not see big issues or problems to register, for instance, our trademarks in India. On the other side, I must say we have a very good, very experienced law office for patent rights, which has also their international network and colleagues in most of the countries. So as far as I can see, I have no negative feedback that problems would have come up and there is a struggling about rights of trademarks. There was a registration, you need to cover or meet the registration timelines, and you have to pay in your money for the registration. And I think if you have good lawyers on your side, and they have on the other side their partnering offices, either it's in India or in other countries. We had an issue with a country here inside Europe about the trademark, which now finally has been settled to our satisfaction. But I must say, now come back to India, no, there were no issues at all. It was going quite well.
Thank you, Bernd. So you're actually emphasizing the same things Abhijit said. Make sure you have good advisor and a good partner, and then you're looking at a marathon and not a sprint, and then you're going to be successful if you're doing trade or an investment in India. Bernd, staying on you then. Are there any challenges that you want to highlight on doing a cross-border investment with India then?
On input, let's say, what are the challenges if you go into a transaction with, let's say, foreign countries, here with companies from India particularly. In our case, there was some special preparement to be done, as before we were entering into this deal and transaction, we had a restructuring in the company. And that was one of the basic requirements to get that clean before the investor will really go for the deal with you, vice versa. So we had a restructuring in the company, which was, of course, a bit time consuming. It was not easy, by the way. It had a lot to do with the former ownership structure in the company and so on. And finally, we also had to speak to our tax authorities that they agree to this restructuring, which will then end up finally with a transaction. So let's say the legal environment and tax environment before we had concluded and we have then finally succeeded, the transaction was something extra which we had to remedy, but finally we got it with the consent of everybody, also from the tax authorities, where I personally had to do a lot of things to get their approval. So Probably that is not always the case, but in case you anyhow, a company anyhow is a little bit in a restructuring phase, you should have an eye on that, if that would have any impact on a later transaction and what impact it will have. And from our point of view, again, I think we would have not done a quick transaction or acquisition or merger with any company in the world without not knowing the culture of that company and the culture of the country where the company is based on. So gladly we had the experience that we knew our new partners, which are at the same time our old partners. We knew them for 10 years. There was a lot of personal relationship. There is a lot of trust. So from this point of view, for us, it was pretty easy to go in. But I think it's very important to understand the culture of a company, its history, where it's based, in which country they come from. Is it a US company? I think it would be a big difference as it is an India company or even a Chinese company. So I think understanding a company's culture and a country's culture is very important before you go to an adventure.
Thank you, Bernd. So Abhijit, I think given what Bernd has just mentioned, I think it also then, as lawyers, for us becomes very important to consider, how do you document these transactions? So anything particular, again, in terms of, the kind of governance, the kind of reps you would take in a Indian-German deal, and are you seeing any changes post-COVID?
No, as a global law firm, we see transaction documents, and I can say that in our experience, we are seeing a lot of standardizing of the documents across different jurisdictions. But to your later part, in terms of what is happening because of COVID, I think a lot of discussions is being done in terms of what is being drafted, because things are just spinning out of control. We are seeing a lot of litigation, breaches of contracts happening in terms of what has been agreed in the past. So parties are becoming a lot more careful about what they are agreeing now. Deals which were closed in April are still being discussed, and they're discussed because not the commercials have changed a lot, which of course is also there, but more in terms of what is there in the agreement. So one clause that we're spending days and nights together is the MAC clause. That has become all the most important, and I think even in the context of the Indo-German M&A, I think it will be quite important, irrespective of which sector we are looking at, irrespective of whether we're looking at an Indian company buying a German company or vice versa.
So that's so interesting. On a deal that we were just doing in our previous, just before COVID hit, I remember I was not that focused on indemnities, but more focused on the MAE clause, because not because I predicted COVID, but you could see that there is going to be some economic downturn, and depending, just knowing that there is going to be some amount of shift economically, you want to make sure that the clients are not stuck and looking bad, especially financial investors, right? Who are private equity investors are usually the kind of clients we have. It's not just about the financials, it's also about looking bad that you didn't predict something and you didn't protect yourself commercially. And then now to see, of course that deal got saved and is now getting restructured because we had a very strong MAE clause, but it's just so interesting to see the focus coming back. And it's, some of these shocks are really important for, learnings for lawyers to just remember, those clauses in the end. It's not just all about those reps, warranties, and indemnities. There are these other clauses that become that are always very, very important. You just don't know when they're going to be used for. Weber, if I can just ask you to also opine on the same question, do you see any changing scenario here? Do you see an increase in the demand for cross-border M&A post-COVID? Also, what Abhijit mentioned earlier, do you see businesses actually moving from China to India? And just key considerations for anybody looking to invest in India.
Yeah, thanks, Pratibha. I think I'll first start with my experience doing Indo-German deals, and I want to just point out that one thing which always struck me is most of the German lawyers which I encountered were doctorates, and it's something very interesting to see the level of detail in which they go when they take their profession, or when they so one of the uniqueness, or I would say one of the things which I encountered with the level of detail which they will actually go in when it comes to documentation, when it comes to thinking through all the issues in a deal, or thinking through issues in a business. That's something which is very, very interesting. So when I do deal in the US, things are, they do go in detail, and they do go and the documentation is quite detailed enough. But the level of thinking at the German level has been very, very different in that sense. With that, let me add my view on post-COVID sides. I think I agree with both you and Abhijit. Some of the clauses which were kind of less important, whether it was MAC clause, whether it was force majeure clause, or some of those clauses have suddenly become very important. I always believe that look from practical perspective. When you look at the MAC clauses, if it's a short term time between signing and closing, then maybe you can spend less time discussing MAC clauses. But if you require a government approval, and that government approval is likely to take a long time, then MAC becomes very, very important. In fact, I remember discussing a MAC clauses because we anticipated difference between signing and closing to be more than 18 months because of the approvals which are required. The amount of discussion we had on MAC clauses was tremendous, because and it was very complex, because both the investor and the company both wanted to ensure that the deal is done, but the investor wanted to ensure that they getting the company which they currently seeing and not very different. On the other side, the company wanted to ensure that after getting into all this discussion and relying on and making plans based on investor coming in, they don't have an out once things change, right? So discussion on whether it is company's performance, or discussion on whether it is the industry's performance on which the MAC is triggered, was very important. I think same thing is going to come back again. I see that a lot of discussion will happen, especially if the economy goes down or the industry goes down, but the company doesn't go down more than the industry going down, then whether MAC should be applicable or MAC should not be applicable. So those kind of discussions, I think, will come in. The other thing, always in key consideration, I look at it, is exchange control regulations. Now, India is one of the unique countries where we still have a lot of exchange control regulation, and some of the German companies who are not used to exchange control regulations, and who don't see that, and it's difficult sometimes to explain to them that, look, the minimum price you need to invest is fair market value, and the maximum price you can ever get out is fair market value, right? So you really are playing at the edge where fair market value is the best, and the what you can get, and worse what the others can get. So those kind of discussion, and the impact which the exchange control regulation has, the both the pricing and the ceiling and the floor, which we just talked about, the maximum price which a foreign investor can get versus maximum price which Indian investor can give when they sell the shares. So both that exchange control issues, the impact which it creates when it comes to, let's say, different clauses, whether it's an anti-dilution clause or a drag clause, and the enforcement which happens due to exchange control issues, are very important for us to explain to them, and difficult for a lot of German clients to understand. Though my experience has been that once they understand, they really don't bother too much, because they are really looking at this as a long-term solution. So they don't think about exit as much as some of the other people in the countries do, some other countries do. So that is something which I feel has been important aspect. And now with the PN3, the new regulations coming in, especially which says that if you are investing from neighboring countries, which includes China, and then you need to go and get government approval. Now, in this situation, especially when that notification also covers beneficial ownership, and I understand and that China also has been very active in Germany, and they have ownership in German companies. And so the question really will come up is, if German companies are investing in India or acquiring companies in India, what is the Chinese ownership in the German companies? And if the beneficial ownership is with China, when do you really go and seek approval of government, and when do you think that it's not enough, that it doesn't constitute a beneficial ownership, will also become a question. And to answer your point on whether you are seeing things moving from China to India, I personally believe that the reality is that there will be companies which will move out of China for multiple reasons. One, they want to not spread all their eggs in one basket, so they will want an alternate factor. The supply chain will actually completely be relooked at it from multiple perspectives, and also because there are trade wars which are happening, which is making China not an attractive place always, right? Not non-commercial reasons why people may want to move out of China. As of now, we have seen little trickle coming in. We have not seen India benefiting as much. It has also gone to neighboring countries like Vietnam and others, which have got benefit out of companies moving out of China. But hearing what the strengths of India is, and hearing what we just discussed, what Ben discussed in the start of the seminar, I don't see any reason why India will not become a natural selection for countries to set up their manufacturing units or their supply chain processes in India, moving out of China. I think it's a question of which industry, where India has a lot of attraction, especially in engineering services, automotive technologies, which Germany has leadership. And that's why traditionally we have seen India provide a lot of value to German companies. And I think some of those companies which are ancillary to this situation, where India has a strength, when you deal with, when you require a lot more engineers and you require a lot more servicing, that's where I think you will see increase in activity from China to.
Thank you, Vaibhav. We're running short on time, so let me just quickly jump into the questions. And with that, if also you want to put in your last comments, any closing comments you want to make. Beck, there's a question specifically for you, Bernd, on how does Germany look forward to investing in online softwares for intercultural and educational purposes in India?
I mean, when it comes to education, this will, or any other things which has to be done in India for not only capital investment, but also personal investment and education of people. I think that predominantly will be the role of our Indian colleagues. Where we can support them, we will do. Again, I have my personal experience when we have done a hub for software engineering in Bangalore, later in China once. No, not in Translumina, was another occasion. I see there is a lot of potential and awareness in the population, at least in those which could have the fortune to have a good education in school, university. There's so much talent in India, I think so, that it is easily to integrate in any international team, in any global interactions, speak very good English, and have now also in areas which 20 years ago were not so much educated, but nowadays much more in really innovative technology. When your colleague mentioned the German investment in India over the last years, I also saw in my investigation that Germany this year, I think, wants to spend 1.1 billion euros in educational programs and innovative programs for urban development, so infrastructure, for climate technology, environmental technology, certainly also in healthcare. So I think there's a lot of outlook where companies can invest and look. Must not be an acquisition from upfront. It starts with cooperation, learn each other where they are good at, where are the Germans good at, bring the strengths together, and then assess, is it worth now to spend some investment even more, go to capital investment in order to leverage the potential which is there. And where you invest, you always create technology. So it's education automatically. It's known by innovative management in very good university studies showing when you invest in innovation, when you move manufacturing technology or any kind of technology, and you do outsourcing, you go in new areas, new countries, this will also spin off own new technology in the countries. So more or less, earlier or later, there is always a mutual benefit from both, and that is globalization. Now we are a little bit withheld with COVID-19, but I think once that becomes solved and remedied, once there are vaccines on available vaccines for to protect against coronavirus, then things again, I think, will come up, show up, and it's going forward.
Thank you, Bernd. Abhijit, maybe you can help us with the next question with respect to: do you see any protectionism developing? Is Germany going to allow entry of Indian businesses, students, lawyers post-COVID?
We have rolled out the red carpet. We're waiting for Indian businesses. We're waiting for Indian students. We're waiting for Indian lawyers to come. There will be a protectionism being put in place, and that is in specifically a design for China. And you will see a lot gradually a drying up of deals from China. We have offices in China, so we know exactly how things are developing on the ground there. And we have a China desk at our firm in Germany. And I know from them that they are seeing a lot less deals than otherwise. I mean, because of the low valuation, everyone expected a lot of Chinese companies to start hunting for assets across Europe and the US. And US, Europe, they're all trying to build defenses against it. But that defense is only, as I said, targeted at Chinese companies owned by Chinese government. But that's not the case with Indian. We are happy. Germany is very happy to have investments across different sectors. We have seen a lot of investments in automotive, IT, engineering, renewable has been always very interesting. And in terms of lawyers, I see a lot of lawyers coming from India pursuing LLM. And I think that's always a good starting point for them to understand a little bit more about the German legal system and helps them, meet more people and land jobs. I have seen gradually more and more lawyers coming from India, and it's a bit of a struggle because it's a different legal system, and you have to prove that you bring a certain skill set that's not available in the market. But it's not impossible. There is a steady increase in the number of lawyers of Indian background being hired here at law firms, my competition, and also at different companies. In terms of the Indian students, I cannot emphasize enough that it makes so much sense for Indian students to pursue education in Germany across different sectors. I think especially I think it's important for them to consider if they are in engineering and IT related. The right place to come for a variety of reasons. One, it's very less expensive. Unlike the US, I have studied in the US and it's terribly expensive. And it took many years to repay the loan. But the education is low cost, and in some cases you can get a lot of scholarship, which allows you to basically study for free or like almost free. A. B, like US and UK also, if you have studied here, you get a study 18 months time to look for a job. Not many countries will do that. Third is that once you start working here and your salary is at a certain level, you get something called as a blue card. You can become a permanent resident of Germany in as less as 21 months. So, I mean, this ticks many boxes. And from a different perspective, I mean, COVID perspective also, given that Germany is a lot more safe than many of the other countries in Europe, we expect a lot more Indian students to consider Germany as their destination for study. The statistics show that over the last few years, the numbers of Indian students has not only increased, but probably has doubled or become 3 times what it has been in the previous years. So it's moving, and I see a lot of Indian faces a lot more regularly than I used to see when I first moved here.
Thanks, Abhijit. That's really, really positive news. I think we've literally run out of time. Unless Nishith Bhai, you have any comments. Sorry, I'll just take this one last question on VDRs, whether they're as accepted by Indian companies as they have been by German companies. I can quickly answer that. VDRs were accepted for at least, for the kind of deals that we do, which are slightly bigger transactions for a while now, even in India. I remember about 3 years ago, we were doing a big transaction for a big private equity fund where they wanted the Delhi team because, the target was in Delhi. But the whole deal, it took, good 6 months to do it. We didn't have a single physical meeting. All the document exchange was on VDR, and all the negotiations were online. So, this was a trend coming, but of course the lockdown has, I think, made it, more acceptable, I think, across, even smaller companies. So I think that's a trend already here and to stay. Nishith Bhai, any last words?
I think only 2 words. Thank you very much. It was wonderful, and Abhijit and Ben and all that. It was very good. I would have loved to hear a little bit about the management style in the Germany, the supervisory board and stuff like that. I don't know. You have a minute or so for people to know that how it functions and works, because it's to an extent representative of workforce as well, and whether India needs to know a little bit about that, but I don't know how much time do you have. But otherwise,
We can extend by a few minutes, Bernd or Abhijit, if you want to talk about that.
Sorry, I could not understand very well. Could you raise the question again?
management, board and how the structure of the typical German company, the supervisory board and
I see. Yeah.
where the decision making rests and stuff like that,
Yes, okay. Let's say I consider myself, and by my experience, okay, it's different if you work in a small company or middle-sized company up to 500 people, and it goes above 1,000 and so on. Depends on what is the company legal structure. Is it a limited company, what we call GmbH, or are you part of a public company listed? So the organization might be a little bit different according to the let's say, ownership structure of a company. Particularly, if you ask about the operational structure, typically you have your mentioned director, you have your supervisor as a technical manager or director, which takes care of production, probably also product development. So you have your administration, finance, you have your marketing and sales. So I think that is not much different to other companies in the world. What we try to do is a trend that we have short decision lines. So, for instance, to me, everybody can come if he has an issue, or we can set up a very quick meeting if an issue would coming up. I know companies which are regularly every 2 weeks sit together, 9 o'clock Tuesday to 12 o'clock. If that is important or not doesn't matter. I personally take care a little bit of a management style where we adopt to the strategic needs as well as on the for daily needs. And we have very close connections to the colleagues, to the managers, but also to supervisors down. We try to remedy if that is a technical problem in a team. So we are very team oriented, but also decision making. Try to make it fast, concrete, very visible and trackable. If that is what you ask, how we manage our operations. Now with the merger with India, we create a top management level where we look at the areas on technology and sales marketing, probably further business development. We try to leverage our synergies, the levels below, say where we have synergies which we should adopt, if that is in product development, if that is in manufacturing, if that is in marketing, also regulatory, legal compliance. I think that are the area which we want to use to make the benefits out of this merger, because this will create really added value, time reduced decisions, focus on the business more by the teams, and then down to the things double in one facility the same as the other. So trying to get the synergies out, try to put it in the overall strategy and company objectives. That is can be very welcome.
Thank
Thank
you
you so
very
much. Thank you very much. Wonderful. So nice of you. It was a wonderful session, and we really thank you for giving great deal of insight into Indo-German M&A corridor. So thanks.
Much too. Was a
Thanks,
pleasure
Abhijit.
to attend.
Thanks, Pratibha.
Thank you.
Everybody.
Thank you, everybody.